Good afternoon. George Cavaligos for DragonSlayer. Well, we got the trade higher last night and went a little bit further than I thought. I thought we'd test that 131.06 C equals A level. Went up to 131.10. Fell just short of a real important fib at 11.5 on the 10-year. That 130.11.5 level is the 79% fib retracement of the whole sell-off that we've seen over the last month and a half. Market didn't give us a lot of opportunities this afternoon. There were a couple minor opportunities where I threw out the idea of a scalp trade. When I talk about a scalp trade, in the 10-year, a scalp trade, you're looking for between 3 and 5 ticks on it. Those are typical retracement moves in a trending market where the market, say, rallies 8 to 10 ticks and then it retraces 3 or 4. Early first couple scalp trades I saw was we put up 2 new highs in the bonds by a tick. I think last night's high was 20, then we went up to 21 right after the opening, and then later in the morning we went up to 22. Taking scalp trades in the bond, you're usually looking for a little bit more than the notes. Say in the notes you're looking for 3 to 5, in the bonds I'm looking for 6 to 8 ticks. A lot of times it's a floor trader's rule where you're local and you're basically trading for 0 commissions, and you can do those types of trades risking a scratch basically. You know, you sell the 1 tick higher high, look for a 6 to 8 tick pullback. Basically you put your stop right at your entry point. Hopefully you got it right on the highs there, so you're not risking much, and you're only looking to make, you know, the 6 to 8 ticks on the bonds and 3 to 5 ticks on the 10-year. Those are scalp trades, and they're typically counter trend type trades when I'm saying I'm scalping. Market then settled down. You know, later we saw the market rally back up. I think the bonds made new highs by a couple ticks. The 10-year tested last night's 131.10 high. A little bit of a divergence, right? The bonds are making new highs, the 10-year's not. It's testing its old high. So again, I threw out another scalp short on the 10-year against that 10 level. The market broke a little bit from there. It broke to 3 to 5 ticks. I then said I'm going to keep some of that short on, looking for a bit deeper of a pullback. My reasoning being, I think we're into some kind of a consolidation pattern here. A lot of times where you see those double tops on the hourlies, that tells you that's typically a B wave. So I'm looking for a C wave, which would retest last night's lows at 130.28 plus in the 10-year. I covered half my short. I'm running a small short, and I have a break-even stop right now. I'll probably even move that stop down more. But I think going into the Asian session tonight, we'll see that 130.28 level get tested, and maybe even a little bit more. The markets have had these pullbacks in the Asian session. Again, last night we saw the market opened up on its highs, immediately rallied up to 131.10, and then it broke all the way down to 130.28 plus in the Asian session. So I'm looking for that type of a scenario, not where we're going to go up and make a higher high tonight, but I think we're going to see some kind of slow grind lower into tomorrow's auctions. It's a tough week ahead of us. Remember, guys, the auctions, 3-year tomorrow, 10-year Wednesday, 30-year on Thursday. Dealers have the order books. They know, by and large, where most, or not most, but where a lot of the bids and offers are for the 10-year. Or for the auctions, for whatever auction, 3-year, 10-year, whatever, 30-year. So they have a leg up on us, obviously. So you want to try and watch what the dealers are doing to a certain extent, but they're pretty good at hiding their tracks. And they put up a lot of sneaky trades, too, that you never know. Moving on, we also have 2 buybacks tomorrow. I think because of the holiday, the Fed had 2 buybacks last week, late on like Wednesday or Thursday. And then today they sold a little bit of the tips. Tomorrow we have 2 buybacks in the long end of the curve. So, Treasury's selling, Fed's buying. Tell me what else is going on. The Ponzi scheme continues, but we have to deal with it and trade along with them. So I'm looking for a dip tonight. I'm looking for a test of that 130.28 level. I'll cover my shorts right in there. And if we do get a bounce back up and we sort of print that 11.5 level and fail at that level, I'll put some more shorts on against there. That's a pretty important fib retracement there too. So that's the game plan. Trying to trade this thing counter trend and not losing a lot of money has been pretty good. We've lost a little bit. We made a little bit. I think net I'm up a little bit for the last week, but boy, it's been kind of tough not being able to get my hands wrapped around this bull trade. And I guess the bull trade question is, are we going the path of Japan, or are we going the path of, say, Greece or one of the other PIIGS countries that have huge deficits and aren't able to produce their own QE because they're beholden to the ECB and not to their own central banks? Odds obviously are leaning slightly in favor of the Japan model, where we have ultra low rates for ultra long time, and it doesn't make a damn difference, but they keep doing the same thing over and over again, and nobody can think outside the box. I'm no genius, but some of these guys have to be able to figure out another way to get out of this debt trap that we're in. There's ways to do it, I'm sure. I just don't know what they are. Maybe some of you guys are smarter than me. You'll have a better idea how to get out of these debt traps. As Ricky says, Santelli, just stop spending. Maybe that's one of the ways we should be able to get out of this. So we'll see. It's not up to us to decide. Our job is to trade along here and try to make some money and stay out of trouble. So we'll stay out of trouble. Have a great night. We'll see you tomorrow.